Hi everyone, Donna here with Bookkeeping Made Simple, and I want to talk a little bit today about bookkeeping systems and which ones are how to design it and what's going to work best for your business. As always, you guys know the drill. If you enjoyed the videos, please like, share, and subscribe. Hit the notification bell on YouTube to be notified of when I upload new videos. I'm trying to do this every day. Um, it's a challenge to talk about new topics inside of bookkeeping. And keep it fresh. But I'm trying. I want to make sure that the proper content gets out and that you're getting good information. So this is about, sorry, I'm never comfortable in my chairs. This is about bookkeeping systems and the proper one for your business. Now, I am biased. I use QuickBooks Online. That's our exclusive vendor for bookkeeping software. Intuit is the market leader. I have read on Reddit, a lot of people get frustrated with it, but then when I go through and I read the comments, I usually figure out that the person that's frustrated with QuickBooks, it's not QuickBooks, it's an operator error, or it's pricing issues. And honestly, if you can't afford 50 or 60 or even $100 a month to have a really effective bookkeeping system, you have bigger problems than I can solve. Anyway, once your bookkeeping system fails, in other words, if you are looking at your balance sheet or your profit and loss and you think that they're wrong, which happens, then nobody really trusts the books anymore, and it becomes a really big problem. We can and do go back, undo the work that's been done, reevaluate the work that needs to be done, and try to fix the mistakes. But sometimes they are so bad, it's better to just throw the old books out and start a new system. I've only seen that once or twice where I have actually recommended that they just completely start over. It's really important to make sure you stay on top of this. Even if you're the business owner and think you know where your money's going, I promise you there are holes in it that you are not aware of. So usually when I start digging into a set of books, there's a few things that are happening, and the biggest one is that the system's not set up properly. You want to make sure that, everyone kind of knows how to set up the bank feeds for their credit cards and their checking accounts and their savings accounts. But once those are set up, then what do you do? So that starts inside of the chart of accounts. We want to make sure the chart of accounts reflects accurately what you actually need to know. And I will talk with business owners quite a bit about how granular they need to have that information. I have seen chart of accounts that were so specific that they were useless. I literally have had seen chart of accounts with line items for cigarettes, and I was like, that's owner's job. That's a personal expense. Unless you are the head of RJ Reynolds, that's not a business expense. And I knew this gentleman, and I knew for a fact, this was years ago, that he was just a smoker, and that does not qualify that to be a business expense. So I had to actually redo the chart of accounts, merge a lot of accounts to figure out what was actually happening inside of the business. A lot of people think that they need to have very detailed books, and the problem with that is it can easily get bogged down in the level of granularity that they're looking for. So we want to make sure that the chart of accounts is set up right, and that what is reflected there, we do not need to have every single vendor's expenditures listed in the chart of accounts. I've seen that too. We can run reports inside of QuickBooks that shows what you need to know for that vendor. We don't need to see it on the profit and loss. So we tailor your chart of accounts so that we can deliver the information that you actually need. And honestly, I want to keep it simple. And I always laugh and say it's bookkeeping made simple is the name of our business. It is not bookkeeping made complicated. It is not accounting made complicated. It is not business made complicated. It's already complicated. We don't need to make it worse. Inside of the chart of accounts, there's a few things I always break out just automatically. Number one, when I'm under auto expenses, I always have separate accounts for fuel And by the way, I always call it fuel, not gas, because at least inside of the United States, gas could be the natural gas coming into your home, or it could be fuel for your car. And I really prefer to have very clear labels on that. So fuel could be diesel, it could be gasoline, it could be charging an electric car for all I know. But we do want to have that as a separate line item, as a sub account under automobile expense. On the other hand, if you have a trucking company, then we want to keep the fuel for the trucks as a cost of goods sold, not an expense, like it would be if you're just a business owner running around doing errands for your business. We want to make sure that fuel for your trucks, which would be diesel, is listed as a cost of goods sold because that is required to be in that business. So we can take the chart of accounts, we do modify it and set it up according to the needs of that particular business. There's some things that are very specific that we do. There's some things that we leave pretty top level. There's some things that we can get pretty specific on. But it's designed, and I've figured out how to set these chart of accounts up over about 15 years of working with many, many business owners. So I've started setting them up in a very consistent way for a couple of reasons. One is, as a professional bookkeeping company, we want the chart of accounts to be the same so that we're not digging through the whole thing every single time we're working on a client and having to remember why client A has fuel labeled as gas and why client B has fuel labeled as fuel. We want to keep it as consistent as we can for ease of our practice. Also because if you're comparing two different businesses, or a business to the industry, we do want to have some consistency there so we can kind of see what those should look like. We also, if you have a CRM or a point of sale system, and by the way, just because the chart of accounts is set up a certain way does not mean we have to leave it a certain way. That's something that we work with the client on. But we want to make sure that it's set up so that we can have meaningful metrics. And if we don't set it up right, then we do have to go back in and change it. The point of sale system or the CRM, a lot of these point of sale systems, I always kind of chuckle, they call them POS. And I'm like, yes, most of them are. They don't integrate with QuickBooks Online very well. Some do, but then when we look and see how it integrated, it just completely throws the books off. So don't listen to the POS sales guy. Talk to us. We can even set up a trial and see how it comes in. We can also very quickly figure out how to start backing it out. And this goes not just for point of sale, but things like A2X accounting for Amazon and other e-commerce retailers. And keep in mind, some of these will say that they integrate with QuickBooks Online. But not really. So we want to make sure that that's set up right. For my own business, I do not use a point of sale system. I use QuickBooks Pay. So I just run our payments through QuickBooks payment system, and that automatically is able to connect the invoice, the merchant fees, and everything. It all comes in. QuickBooks is very good at that. And then I can immediately see which clients have paid, which ones maybe had a check bounce. That happens once in a while. It makes it really easy to track that way. What about cash and checks? Okay, we do receive them from time to time. In 2023, we want to make sure that money arrives to you as quickly as possible. So yes, you can accept checks and cash, but it is easier if you do ACH and credit cards, digital payments. I also do not recommend Venmo or PayPal for businesses. Just not a fan. If there's any way you can use use an actual merchant services company. PayPal and Venmo are really made for basically transfers. They're not they're not meant for business. They were never set up for business. And I have really, really bad feelings towards PayPal, who owns Venmo. So I discourage use of those. I also discourage use of Zelle. But sometimes you have to get that payment transferred. Again, it is a case by case basis. So we can take a look at your business, take a look at your needs. If you're a real estate flipper, it may not even be feasible for you to accept payments through ACH. You may just either have to take wire transfers or accept a bank or accept a check from the title company. But just keep in mind that those do come with different headaches, and we can help you figure out and set up what's best for your business. Bill pay systems. Okay. All of mine actually are set up on auto pay. And I generally do that through the vendor's website. So for my phone system, I set it up through the vendor's website and I just pay it on their website. Same thing with my utilities. I go to my vendor's website and I pay those. And if I can set it up on auto pay, even better, then I don't have to worry about payroll. If you're growing your business and you're going to be bringing people in, it's better to go ahead and set up your payroll. That is going to have a big impact on your bookkeeping. I kind of prefer, when we do payroll, we typically do it inside of QuickBooks because they do have they automatically interface. Some of our clients have been using Gusto, and that is also a really good payment system or payroll system. Now, yes, you want to automate your books as much as you can, because why spend more than you need to on bookkeeping? But you still need to have a qualified bookkeeper or accountant at least take a look at your books once in a while. Inside of Bookkeeping Made Simple for our clients, we do a quarterly review of all of our client books. So that means that either I or someone with a degree in accounting, someone with at least my level of experience and education, is going to open up the books. We have a list of things that we specifically look for. We want to make sure the balance sheet is correct, that the profit and loss is correct, and nothing is understated, nothing is overstated. So the catch is with automation is that, yes, it's quick and easy, but if you're not thinking about it, you're not paying attention to it. That which it has often been said, that which is measured is what gets managed. And what you pay attention to is what you're going to pay attention to. There was a way to explain that, but I've forgotten what the saying is. But like I said, one of the things that we do here is we will go back through client books, and we will go back years sometimes and undo all the work that they've done, because we have to, and then redo it. So some of the things I see very, very common, especially when people are setting up rules or trying to automate their bookkeeping, we see undeposited funds being used incorrectly. We see overstatements of income. We see expenses being sent to the wrong account. We see quite a lot, actually, because QuickBooks will just throw something in there and it'll show up in green on the bank feeds. And some clients will think that's just what you do. You accept the bank feeds, and that can cause real problems. So you have to have oversight if you're automating bookkeeping. And that is what we do here. We oversee the bookkeeping, we make sure it's done correctly. And then we also have accountability, which is the quarterly review, where the boss reviews all of the books and either sends it back to the bookkeeper for some further review on their part. And then once that process has been done, then we meet with the client and talk to them about what their income is, what their goals are, what kind of tax strategies we should start putting into place, and so on and so forth. But never just automate your books and assume that it's going to be right. Even if you're having AI do it, it's probably not right. So it's got to be reviewed and updated regularly. Now, my own books for my own business get updated every day. Our client books get updated on a weekly basis. And I think that's really the minimum that I would expect any client to expect. Weekly gives us a chance. I always laugh. I'm like, the more often we can review the books, the better, because I have seen in my own books, I did again, I pretty much review every day. I have seen transactions come in that I had forgotten what it was for, and I had to go back and look, or I had to go back and check for a receipt. When I design everything well from the get-go, then it becomes very quick and easy, and we can reassure our clients that the books are correct. A lot of businesses, though, like I said, weekly is the bare minimum. Now, before we had a lot of technology, people had a dedicated bookkeeper. That meant someone that came into the office and sat down, and that was all that they did. It was time consuming. It was a full-time job. It was back in the days of the 10-column ledger book. And it was both easier and harder to stay on top of it. Easier because you had to be in the books every day, literally. Harder because you actually had to put the reports together. And we want to make sure that the reports are accurate. So you should be updating your books at least weekly. And again, that is what we do at Bookkeeping Made Simple. We update books at least weekly. And then the final thing is reconciling your bank accounts. Now, if everything's coming into your bank feeds, why do you need to reconcile? Well, a few reasons. One is it is very possible for QuickBooks to bring in duplicate transactions, and I've seen it happen. It has happened sometimes when the bank feeds fail and we've had to reconnect them, and it re-imports everything. It doesn't really sync, it just imports. So that allows us to look for duplicate transactions. Also, the bank sometimes sends through duplicate transactions. I remember really early on in my bookkeeping career, I actually did have a client who had sent a check to her insurance company, and they had processed it and sent it to the bank. And it was like the end of December, it showed up on the bank statement, and I remembered seeing it. And then a few days later, the very beginning of January, it showed up again. If I hadn't been actually manually reconciling those, I would not have noticed. Or the other thing that happens a lot is QuickBooks will ask you to code things or think it needs to be coded to an uncategorized asset, or they will try to transfer things to income, which you can't do. And again, if you have duplicates, or if you have things that are sitting out there that have not been reconciled in a few months, that's something to look into. And if you're not reconciling your books the old-fashioned way, with the statement and a check mark and your QuickBooks and checking them off to see what went through the bank, you might not ever know. That can cause real problems down the road. When I do taxes, I do not audit the books. If we've been doing the books, I've been auditing the books all along. But when someone comes to me that's a brand new client and I do their taxes, or if we are not, or if they are not our bookkeeping client and I do their taxes, which does happen, I do not audit anything. So I have to have real faith that the profit and loss and the balance sheet that I'm being presented are correct, because I'm not going to double check them. I don't have time. Don't get paid that much to do it. So that's one of the things that's really, really critical to know. In fact, most accountants don't audit the books because auditing is a very long process. So the best thing you can do is make sure that your bank accounts are balanced every month. And that is something that we do. Now, like I said, you can't manage what you don't measure. That which is measured is what gets managed. So we need to know what your key performance indicators are. And that's something that we talk to with every business owner about. I'm starting to implement them in my own business. And a lot of business owners don't even know the right questions to ask. So we want to make sure that we are tracking both the leading indicators and the lagging indicators. And when the books are done correctly, we should be able to pull those out pretty easily. We also should be able to budget into the future. So I want to do a lot of, I'm coming into the season where I'm going to be doing a lot of budgeting and forecasting, because I do those for my own business in the fourth quarter, because in the first quarter, I am just slammed with tax season. But I do want to know what were my expected results? What were my actual results? And was it better or worse than last year? What was my results year over last year, maybe even the year before that? Maybe even from the beginning of my business. Can I see how my business has grown or contracted? And that's important to know. For example, when in 2020, I didn't really think that any of what was going on politically was going to affect me, because I'm an accountant. It was considered an essential business. And I forgot about the fact that so many of my clients were being shut down. So when I went to look at 2019, 2020, 21, 22, 23, over 5 years, I started to see kind of what the patterns were and what my growth or lack thereof was. And 2020 was a really bad year. My income dropped by half. My revenue, I should say, dropped by half. And then it started to pick back up. So I could kind of see that as I was looking through the reports. We also want to look at that and take the time and say, let's say you want to hire someone new. What is that going to cost? Not just freeing up your time, but really looking at a cost-benefit analysis. It takes a little bit more work to do that. But if you already know that for every employee, I'm going to be able to bring in X number of dollars in revenue. So if I hire a new employee, I'm either going to have more revenue or I'm going to have more time. Hopefully both. So you need to take a look at how much, and a lot of people forget that onboarding an employee costs money. Training an employee costs money. So that's a lot of things that we need to look at. We also want to make sure that as you look at your books, you have actionable items that you can do. And this is something we do as part of the quarterly review. But when you as the business owner go into your books, you should be able to look and see, am I paying too much for payroll? Am I paying too much or not enough for advertising? Am I maximizing any tax strategies that my accountant may offer to reduce my tax burden? Should I renegotiate prices with a vendor? How about accounts receivable? That's the money that's owed to you. Is that being addressed frequently? The more often, the better. We're in an inflationary period. which means the money supply is shrinking. Do we need to adjust prices? Do we need to, have vendor prices gone up? It's going to require us to raise our own prices to reflect the same, to make sure that we're keeping the same margins. Do we know what our margins are? There's a lot that goes into bookkeeping. It's way more than just balancing a checkbook. And so I encourage you to give us a call at 801-692-0032. We are in the office 9 a.m. to 5 p.m. Mountain Time. So we are in Utah. And we do serve clients across the United States. If you have any questions about any of these things, please feel free to reach out. My contact information is in the description. This is available on YouTube and Spotify, and we are really looking forward to helping you with your business as you start to grow.